Yo, big P Dog 8 here. Doing a follow up. I don't know how good you can see this, but I'm doing a follow up to my fucking banks video. Fucking banks, why now, whatever shit I said. And it's just about, if you've not seen it, I recommend you watch that before you watch this video. And it's just about the issue I had with my credit card, with my bank. I had a credit card that I thought was 0% interest for 9 months or 12 months at a time, and only to get the credit card monthly bill saying I was getting charged, which says here 21.95% interest, which I found very strange, and I rang up to ask what's going on, and the bank held their hands up. Yeah, your mistake, sorry. So this is a follow up. I've got the letter. I don't know how well the focus is. Like, I'm using ScreenFlow. You can't see what the camera's recording. You can only see what's getting recorded on the screen, so I don't know how good the focus is, but I'll read this letter out anyway. Excuse the artwork for obvious reasons. I was all shit at art at school, which is another wasted subject anyway on the curriculum. Thank you for your recent communication. My investigation revealed the balance transfer keyed on your account was earning interest at the wrong rate of 21.95% rather than the promotional rate of 0.00% for 9 months. I have corrected this and this will show on your next statement, plus the refund of any overcharged interest. Should you need further help, please contact us on the telephone number above. Yours sincerely, some fraud from the bank. So that's it. That's the proof. I don't know how good you can see it. I'll zoom in, zoom out. Trying to charge me 21.95% interest, but it was really 0%. I don't know how well you can see it. Apologies again, but bastards. So that's that. If as I say, trust your instincts. If you think there's something, if you feel there's something wrong, there usually is. So that's by the by. That's dealt with. As I said before, I felt like complaining myself, but I'm going to get my money refunded if I did pay any interest anyway, so that's done. Another one, I want to share with you this article that was on The Economist that I found on their Twitter. It's about hedge funds, and for those, like I said before, about you need to really do your own research when it comes to the gold and silver. Because one thing I've discovered, being hard into the gold and silver for a year now, is that I believe there's going to be a currency crisis, and along the way, long term, yeah. But what I've learned, and what's obvious to me, is that a lot of analysts and these so-called truth movement, gold and silver bug movement truthers, and yeah, I say their names. Obviously, the likes of the guys who you like, Peter Schiff's, Jim Rogers, and even people, probably most of the people on YouTube. Like, I obviously don't want to mention any names, but if you watch this video, then you've probably seen the likes of, I don't know, Brother John F and all these guys, all their videos, which I'm not criticising them. But a lot of them do give advice. Well, I wouldn't say advice, but they give their predictions, I should say. And the truth is that in terms of the short term, what's going to happen, if it's going to break resistance and Fibonacci retracements and all that shit, no one actually knows what the price is going to be tomorrow. No one knows if it's going to go up. No one knows if it's going to go down. And I can tell you that for a fact. That's why I like listening to guys like Corey C. He just it's all about action with him. He just does his talking with his action. He just buys. Oh, he's got a lot of silver. He doesn't give predictions, tells people what to do. I like Raw Dog, aka Mr. Clueless Idiot. He goes on instinct, and he was the only person that called the bottom at 26. Everyone was saying it's going to go to 18, 15, $9. He bought it 26, which proved right. As I say, that's when I made a video when I was wanting to buy, but if you look at my old videos, I was kind of going through the phase of trying to save the VAT in Germany, which I'm still going on. I'm still actually saving cash to buy at the minute, so I'm not far away from having enough to maybe get a monster box or whatever. I'm not far away to make a big purchase, so I'm still kind of holding cash, and cash is there's nothing wrong holding cash at the minute. But I think the best indicator is when to buy is yourself. Just trust your instincts. Just go, if you get a gut feeling that you want to buy it. Don't listen to anyone else. Don't go on YouTube and listen to the other guys that are telling you it might go down to 18, or tomorrow's going to be 50, then it's going to be 70. Just if you're in tune, gold and silver, it's part of the earth. We're in tune. We are part of the earth. God put us here, so if gold and silver's telling you to buy it, buy it. Don't listen to anyone else. Anyway, as you talked about the final, one of the final signals or disasters that's going to happen with the fiat currency market. It's going to be the bond crisis. That's when it's really going to hit home, when bondholders start dumping their bonds for bullion. But I think what's going to happen before, this is my thoughts. What's going to happen before the bond market goes is going to be the hedge funds, and I'm going to share with you this article about hedge funds, as I say in The Economist. Here we go. Total hedge fund assets under management ended 2011 a smidgen over $2 trillion, according to hedge fund research, having fluctuated around that figure throughout the year. Net capital inflows are over $70 billion, half of which were allocated to relative value strategies. The tough economic climate prompted investors to adopt a risk-averse attitude and seek quality assets. Relative value was the best performing strategy, but even so, it only managed to eke out a return of 0.5% net of fees. Total returns in the composite index fell by over 5% in 2011, the second worst year since records began in 1990. Equity hedge funds, macro and event-driven indices declined by 8.3% to 3.8% and 2.8% respectively. They attracted net inflows of $26.9 billion. A recent survey by SEI, a financial service firm, found 38% of institutional investors expect to increase their allocations to hedge funds this year, down from 54% in 2010. Redemption notifications in January were at the lowest since 2008, when records began, according to Globe Op, a hedge fund administrator. This could be because they cannot get better returns elsewhere, or they learned a lesson from 2008 and decided not to liquidate at what they think might be a trough before a rebound, whatever a trough is. Alternatively, it may simply be calm before the storm. Redemptions, which tend to occur on a quarterly basis, might not be reflected in asset flows for another few months. So this basically is telling you that hedge funds are not making money. They're actually losing customer money. You can see, obviously, this article's still up. Global assets under management, nearly just under $2 trillion. And that's the performance, how the hedge funds are dipping in macro relative value, like equity hedge funds. They're losing value. So there's going to come a time when these hedge fund managers are trying to make money for the customers, and the customers are going to be getting onto them. As Mike Maloney said, his financial advisor said, I only lost 0.5% of your family estate on investments, but the Dow Jones was down 2%, so I've actually not lost you as much as what the Dow or other hedge funds have lost you. So you should be happy with that I've lost you some money. So it's going to come a point where, as you see, these hedge funds are not making money in the stock market. So if they can't make money, God God help us, your amateurs that try to trade. So I think there's going to come a time when these hedge funds are going to go to the metals. When there's nowhere else to go, where else? Yeah, they can go to bonds or whatever, but they can see what's happening with bonds. But I think these hedge funds will start by going to the precious metals, as in the GLDs and the SLVs, which because obviously easier, and all sorts of mining companies. So I think that's going to be massive for precious metals in months and years to come. And then obviously I think there's going to be a disaster in the bond market where the US and Britain, what Britain already doing, is going to print to guarantee their debt. I was watching a thing on YouTube, The Greatest Truth Ever Told, and I can't remember the guy's name. But he put the Alan Greenspan thing, where Alan Greenspan basically he said all the evidence you actually need to see what's going to happen is what Alan Greenspan says. It's that we can guarantee the debt because we can always print, but we can't guarantee the purchasing power, which is what more do you need? So I thought it's a good article. Even though I've read it out, I'll still share it with you. And it's very bullish for gold and silver. I'm hoping it goes down a little bit so I can buy. I'm not buying at these prices at the minute, but I'm not giving any info. I'm not telling you what gold and silver is going to do. I'm not saying it's going to go into the low teens, it's going to go to 50. I'm just going to wait and buy myself. But as I says, I've not got that gut feeling, because every time I've had a gut feeling I've bought, I've actually done quite well. And done relatively new. But as I says, you're the best advisor when it comes to buying precious metals, no one else, because to be honest, nobody knows what's going to happen. Long term, yeah, but day to day, to give you information what to buy, when to sell, just do your own research and just listen to yourself. Peace.